Welcome traders and investors. My name is Nandis. I'm the founder of Dalrymple Trading. Today I'll be introducing you to a special guest. His name is Chris McConnell. He's a fellow trader who's been trading for the last 11 years, and he wants to share with us his journey in trading and basically fill us in on how he's been able to get profitable in the last 11 years of his trading journey. So I'm really excited to present Chris to you today. This is one of the many episodes that we'll be bringing on my channel. It'll be called On the Sidelines, and it's just to catch up with other traders who will be able to share our ideas and our wins and our losses and come together as a community. So I'm really excited to present Chris to you today. Here he is. Welcome to an episode of On the Sidelines at Dalrymple Trading. How are you today?
Mate, I'm great, and Nadine, thank you so much for having me on your show. I'm so excited to get into it with you, and just such an honor to be one of your first guests.
Likewise. Very honored to have you. And I think one of the key standouts in my platform is that I really want to have authentic traders and authentic people that do real work in terms of, trading and just everyday sort of individuals that really succeed at this game and try to pick up skills and wisdom as we go along. So thank you for joining me. That's really good. So Chris, I think what I might do is I'll kick off with a question for you. How would you describe your trading style in one sentence?
Sure, man, no problem. So my style that I've developed up to this point now that is subject to change for sure, but I'm most definitely like a momentum swing trader type of person. I like to see things that are moving in an upwards direction, and I want to see things that are trending, trending upwards, and I would probably, I suppose that's more than one sentence, but I tend to hold things for, a little bit of time. And I'm a momentum swing trader.
Yeah, so you're more of a swing trader and definitely not like a scalper, so we can put that aside. So we'll unpack a lot of that a little bit later on this interview. But I think what we sort of want to start off for our audience is a little bit about yourself and your background. Rumor has it that you're Canadian Australian, so talk me through a little bit about how you ended up down under and what your typical sort of day looks like in terms of, I do understand you're working too, so talk us through what your typical day looks like and sort of how you got into trading.
For sure, man. Well, thank you. Yes. I did move over here. I am originally Canadian, so I moved over here. It's going to be 11 years shortly
Wow,
here. So I've been over here for a while. I am both dual citizen, so that's a lovely thing to be able
very good.
to, go between places if I choose to. But for now, Australia is definitely my home. What got me into trading, man? I didn't start trading actually until I moved over here. So that was like I said, probably 11 years ago, and just thought I had always thought about it, and I knew of this thing, and people could make money by using their own money, and you were basically wagering on companies is sort of how I saw it, and I thought. I asked around a few people if they'd ever done it, and I wasn't getting a lot back. And so I just thought, you know what, I'm going to open up an account. I'm going to buy a few things that I've seen around, and I just see how we go, and the obsession just kind of started from there, really. Yeah, yeah.
But was there something that sort of triggered you to do that? Did you like see like a movie or like, I mean, anything that sort of triggered you to sort of get into trading, right? Sometimes you read a book or watch a movie or see other traders. Like, was there some sort of trigger or some circumstance that sort of
Um,
got you into it?
yeah, there probably was, but I can remember for this particular thing, it was the employer I was working for at the time was using Zero as their cloud accounting and their payroll
Mm,
system, and it had it probably still does, but a very sleek looking website and just a very streamlined look, and everything looked very easy. And I thought, this Zero, like this looks really slick, and turns out it was, but that was my first jump into ever buying any equities, and I bought some of that at a really good price. It's long gone now, but I just remember looking at the platform, and I just thought, oh, this looks really good. Like this, I just feel like if these guys haven't gone somewhere yet, that they're on the way up. And I had no idea at the time, but I really thought it was Zero that really caught my eye. Yeah, that was sort of my first one, to be honest. Yeah.
so you held on to that for a period of time. It was a bit of a value stock and went over time and then went up, right? Yeah. And
Yeah, that's right. That's right.
yeah, I understand like a lot of your content that you've shared with me so far. I know you've got a YouTube channel which we'll come to later, but I understand that you sort of value the CANSLIM system, a little bit of IBD. I get that sort of feel for your type of trading.
I do, man. Yeah, I do. I really like the idea. I still have plenty of work to do, but I like the idea of using both technical and fundamental. I know that in our day and age that most guys out there are purely technical analysts, and that's fine. Like that's totally there's you can be plenty successful doing that. I just think that there's some fundamentals out there that I don't think can be ignored, and once you understand them really well, that I'm still getting there, you know. And I'm not great at reading financial sheets just yet, but I still want to have um, a well-rounded approach to my trading, and I do feel like yeah, that CANSLIM method is has been a winner and will continue to be a winner in
Oh,
the
yeah,
future. Yeah.
absolutely. Yeah, absolutely. I mean, if you don't need to look far to find people like Mark Minervini and others that have been very successful with the system. And I think sadly, William O'Neill passed away a couple of years back, if I'm not wrong. So the person that sort of built that system sadly passed away. But there's a lot of his students that are implementing that system really well and getting results. And it's really refreshing to actually um, get a trader like you on the podcast, because what it helps us to do is to um, talk about stocks as well, because I know you're a big stocks guy and you like to find those individual stocks, and try to trade those, like you said, with zero and stuff like that. So was there any early mistakes that really shaped your trading? Like when you first get into it, what was the impression that you had? Was it sort of like Wall Street, the movie, or was it very different from your experience when you actually, yeah,
Great
early days?
question, man. Thank you. I think that there was a lot of mistakes, and I'm still making mistakes, and I'm trying to curb those. But one thing, because I'd asked around, and I didn't really know anyone who was doing it, so I was really left to my own devices. And so what I would do is you'd open up the paper, like I'd open up the Sydney Morning Herald, the Financial Post, and just try to go through, and I'd look and try to find yeah, what they were sort of hyping up, which
Yeah.
as you probably know, man, is like no way to be looking for things. So I could give you particulars if you wanted to, man, but I think one of my biggest ones early was not having an idea of like sort of a pump and dump.
Mm,
And if you or your listeners are aware of what that is, but I was definitely fell victim to that a couple of times early because just out of ignorance, probably,
yeah, sort of like what happened with the GameStop saga during the COVID times. Remember when everyone was pumping that one stock up, and then yeah, that was a different time. But yeah, like that's a common mistake, I guess, reading a lot of articles and trying to sort of come up with your, own sort of strategy. So it's always good to do your own research, Chris. Sort of, which brings me to your sort of exact trading setup. So how do you actually do your research, Chris, because I know you're a stock guy predominantly, and on that basis, how do you actually screen for stocks? Do you use like IBD newsletter, or do you look, what's the way that you get your information to find potential winners?
Yeah, man, for sure. So what my style is I have a few. I use a software platform called Beyond Charts, which is an Australian platform, and in my opinion, second to none. It is their customer service is great, their product is great, and so what I do from there is there's a couple of scans that I run to try and find momentum stocks that are on their way up, and there's a few metrics that I use. Once I've done that, what I like to do, I like to scan that, and I like to try to find industries that I think, like if I can see in that scan, if there's let's say there's 50 stocks in that scan, and 23 of them are gold, or 15 of them are, something in particular. You know what I mean? I like to look for those, and then I like to sift through. I like to sift through almost all of them and look at the charts themselves and see if there's any very particular setups. Going back to William O'Neill, some of the ones that he talks about, cup and handle, double bottoms, any of these really particular technical indicator setups that often, not guaranteed,
Mm.
oftentimes showing potential breakouts. So those are, and I also I'm a big fan of a good news catalyst not a, what would you call, like a not a phony one, a
Mm.
fake sort of pump and dump one, but a good,
Genuine.
the pre,
Yeah.
good, genuine. The president has announced X. Um, this industry is going to be coming up, like what was sort of happened with uranium recently, if you know anything about that.
I heard
And
about
the
that.
U.S.
Yeah.
is Donald Trump wanting to get the regulations lowered to allow more nuclear energy to be produced in the states.
Yeah, can
So
you
stuff
talk
like
more
that.
about that, Chris? I mean, that's an interesting topic. I don't think a lot of our listeners would have delved too much into the uranium topic. Just out of
Yeah,
curiosity,
for
give
sure.
me
Well,
like a
I'm
30,000 foot of what your insights are there so far.
yeah, for sure. So going back, I think it was about May 27th or something. And as probably a lot of your listeners would know about this green sort of energy thing that has been happening. And I think that what people are realizing is that the sun and the wind aren't able to sustain what we are going to require for energy going forward. I believe that those in the know understand that nuclear energy, despite the you know, taboo behind those words because of what sort of happened, Chernobyl, Fukushima,
Mm.
these types of things, that it's actually a fairly safe way to produce energy. And what's happening now is a lot of these AI companies are going to nuclear power to power these ginormous info centers, etc. And so President Trump over in the States said, it was about, like I said, May 27th or something, that he was try to deregulate the nuclear industry a bit so that these companies who dealt in that space were able to do business a little bit more freely. So starting from the bottom there, we have uranium, and then we go all the way up as the pyramid goes up into, secondary and tertiary use cases, which nuclear reactors, and then there's the whole ecosystem around that. So um, going back to the original question, like a good solid news case, and the numbers just go up from
Yeah.
there a lot of the time. Sometimes like it's hype, but there's also some meat behind it as well.
Yeah, and I've seen a couple of uranium trades that have really soared in the last sort of 6 months overall. So I mean, uranium wasn't a thing back then, but it is sort of now appearing in a lot of traders and investors' radars, as you say, Chris, right? So, and I think even in Australia, there's a lot of political debate about whether we should have uranium or not as part of our, energy mix. So it's quite interesting to see how it plays out here locally as well, moving forward. So when you are obviously buying into one of these companies that you use using, analysis, as you said, using the William O'Neill methods, how do you calculate your risk? Do you look at certain technical levels, or what's your formulation for calculating risk on any trade?
Yeah, man. So what I try to do is what I'm personally trying to do is I want to put enough risk on that we can make as I want to put on as much risk as I feel comfortable in risking. Um, so if let's just say it's an A plus setup and everything is looks right and there's feels like there's really no chance that in the next 2 to 3 days that this is going to go down, then
Mm.
I'm playing with the house's money. I will want to get to that number where I'm the most comfortable, but on the highest on that chart. If then I feel that I was right and that's been confirmed, I may double down on that position again. But all I'm trying to do with position sizing at the moment is to get myself incrementally higher so that when I get into the numbers that I expect to get into in the future, I am not looking at it and putting my buy button, push, and then freaking out on the inside. I want to be completely comfortable. So I guess, Nandi's, to sort of put it in a comparative sort of way, like I'm just doing weights in the gym. I'm just gradually
Gradually
trying to
increasing it. Yeah, so you're
gradually
sort of
increase to where I'm comfortable.
yeah, so you initially kick off a trade, and if it continues to go in your direction, you add more as time goes on, and then if you are wrong, let's say it does unfortunately go against you for whatever reason, early in those early stages, you cut the trade. But is there a certain percentage you cut it at? Say if it goes 5% against you, 10%, or is it based on, I guess, a technical pattern?
Yeah, well, I like to look at a couple. I've tried a couple different things, and I feel I haven't actually established what my number one get out scheme is yet. But one of them that I definitely use is ATR, so average true
True
range,
range.
and that I mean I think then Turtle Traders, like we spoke about before, it was they did an ATR of two ATR stop.
Hmm.
I found that to be a little bit tight because just the way the market is moving at the moment, like sometimes it's just so up and down that you just want to give it. You might want to give it that 4 or 5 ATR movement, but
Mm.
space to move. I've also gone just a risk reward based stop, saying I'm comfortable losing this amount based on the price of this stock, so I'm going to just I don't want to lose any more than that. You know what I mean? And if I can be happy with that, and I feel like it's still giving it room to move, that's the number I'll
Yeah.
choose. But I have tried a few different things, but still working on
Yeah.
exactly
Which one it is. And I
nailing
appreciate
down.
that, that sort of genuine authenticity there, Chris. I think that's very humble of you to call that out because, it's not one approach that always works when it comes to risk to reward because some stocks by inherent nature are very volatile. So they tend to move a lot more up and down compared to some other stocks, which may not be as volatile. Therefore, your stop placement is dependent on what stock you're dealing with, which industry you're dealing with. So there's a lot of factors, in my view, that come into that. On that point as well, for our audience that doesn't know what an ATR is, I just want to explain to everyone. ATR is basically, in my view, the amount of price that, sorry, the price, the amount the price moves within a certain period of time. Right? It's a range. So if in a day it could move on average $2. So if it's a 2 ATR, we say it's $4, 2 times that amount. So it's a rough average of how much prices move in a day. So you look at that as potential stops. Um, so because you do a lot of stocks there as well, Chris, do you actually have a basket of stocks across various industries, or do you tend to focus on one main industry? For example, I know AI is quite hot right now. Everyone sort of seems to be buying into that sort of thing, but are you more across various types like hospitality, transport? What's the sort of breakdown of your structure there?
Yeah, man, good question. I think I am across a few. I don't like to put too many eggs in one basket because just for the fact that yes, you may have, let's say, just going back to uranium, like we spoke about, if uranium has a great day and I've got 3 positions in uranium, they will all do well. But on the days that uranium's not doing well, I just like to have, if gold and silver are both doing well on those days, and I can still, my, P&L can still continue to sort of rise where rather than having these massive highs and lows. So to answer your question, I like to be fairly diversified. I don't want to have too many positions in one sort of particular sector. However, I do tend to go towards like resources and but resources can be fairly broad. I mean, not all resources are all going to go up at once and go down at once. So, but I do think in the same vein that if we looked at certain stocks as like a wheel with the center and then
Mm.
spokes all around, like our AI ecosystem just has so many spokes that we can work off of right now. That's kind of really that's what's pushing this bull market. The uranium, the gold,
Yeah.
um, all these sort of aspects. Like you can just go strictly to AI companies that are building, but you could go to um, data centers. You could go to construction companies building data centers. I mean, there's just so much you can do. I tend to focus on the base product because I feel as though that's going to be your most valuable. That's if I was trading something between my country and another country, we would start with the base product. So that's what I try to focus on
That's really interesting.
generally.
Yeah, that's really interesting, Chris. I think you sort of tend to focus on energy stocks from what you're telling me a lot recently, especially with the advent of AI, those energy stocks, for example, as you said, like water was a natural resource, probably can trade that in some shape or form. Uranium is one, and then you have, I guess, data centers, so many because, and I heard that Nvidia is spending billions trying to build these data centers now. In some ways, though, Chris, this period sort of takes us back to like the 2000 dot-com bubble as well, where everything is sort of going up, right? So crypto went up crazy over the last couple of months. S&P is going to all-time highs. Gold is hitting all-time highs. Do you have any reservations about where the market is currently at overall?
Oh, I think so, man. Like I think when you look at, I was just looking at S&P the other day, and um, for the last 6 months, I mean, on the daily chart, you can see it's gone pretty much every day in one straight trajectory all the way up. And so I thought, okay, well, let's go back and find out where that's happened previously. And there was another period, I think it was in 2023, another 5 to 6 month period, and it did nearly the same thing. And then for a couple weeks there, it dropped down about 20%, but I mean, there are apprehensions, but I think sometimes the media and the news will want to really hype up the idea of a crash, like a stock market crash. But man, I think the thing is those crashes, those 20%, like when you're confident in what you have in your portfolio and you're able to see through sort of the hype, you can go, you know what, man, this might be a crash, but those are often really good times to buy back in and get something at a discounted
Yeah,
rate.
totally agree with you there, Chris. And look, I tend to agree with that wholeheartedly. I think, yes, we are probably in a bubble, but the bubble just continues to rise. And, when people are usually spelling doom and gloom, that's usually when the markets rise. Who knows? The S&P can have a whole lot more left fuel in its tank. Even if we have a 10 to 15% correction, that only brings us down to the lows of a couple of months ago, right? So we have to see that in that perspective. Which brings me to my next question, Chris. So when you're onto a winner, all right, like let's say you've gotten in, it's going up, and you've sort of held it for a while. What are the triggers that sort of prompt you to get out? What sort of says, okay, I made my profit at this point. Now I think I need to take a break from this because we're giving a swing trading strategy. What are those triggers for you to actually exit the trade in a proper way?
Yeah, great question, man. Listen, I have tried a number of different things, and what I basically, so I'll tell you what didn't work for me, and I'll tell you why it didn't work. Um, so I was going for a while there, I was doing a 2-to-1 risk to reward. So I'd put on X, I'd want to make Y, and once I made Y, I got out.
Mm-hmm.
And that was working like that. I made some money doing that, but then once you keep those stocks in your watch list and you see, well, they've still gone up, like this move wasn't done. Yes, I've taken my profit, but the move wasn't done. So I decided, okay, let's go back to the drawing board and figure out like some type of technical indicator that can show that the move is going out. So basically what I'm doing now, bro, is I've got a moving average technical indicator that I'll use that'll show me like, okay, the move might not be completely over, but it gets to a point. This moving average cross
type thing, indicator, that sort
that's
of thing.
right. That's right. So I just use that and I go, okay, once that line hits that line, I'm going to go out, and then we will look at it again later if we have to. But that if you have established rules, then you get out and you've taken your profits and you have a reason to get out.
Yeah, and do you use trailing stop losses, or you don't do that at all? You don't trail your stop?
Oh man, that's another thing I've struggled with too. Not struggled with, but I've had to learn about. So sometimes I have moved my stop to break even, and I've moved my stop up to there. And for the first while when I started doing it, I was like, okay, well, we've made 4%. Let's move this up to 2% profit, and then all of a sudden, because you feel like you're playing it real safe, you've played it way too safe, have a dip down, you're stopped out, and then the stock just keeps going. So I play my stops actually like really pretty liberally, actually. Like I keep my stop until I know that we're well into profit, and then I want to be above that break even line by I have no certain set amount, but I just want to know that stock is going to have plenty of room to move. If I'm convicted to it and I've put my money where my mouth is, I'm gonna hold on to it, and I'm gonna give it the room it needs to breathe.
Great, Chris. And just for our audience as well, I'll basically explain what a stop loss is for some people that may not be aware.
Yeah, absolutely.
Stop loss is basically a level that you put when you get into a trade which automatically takes you out if it turns in the other direction. For example, if you buy something at $10, it goes up to 15. You can put a stop loss at 12. Okay, so if the prices dip back below 12, you bought it at 10, you capture that $2 profit, and then you get out of the trade. So a stop loss sort of protects your downside. So that's what it is. And a lot of traders do use that. But from what you're telling me, Chris, your method has a discretionary aspect as well, for sure, because you are calculating a lot of these levels based on your discretion as well. Where the stop losses should go.
I am, man, and that's probably going to use like I will learn things as I go here still, but I have learned from really like keeping a journal, like really keeping a diary of what's going on, and I go through each one and I go, okay, well, where did the problem lie here? And in the last review that I did of last quarter, 2 quarters ago, a lot of my problems were stop loss related and moving stop losses up too quickly in order to, I suppose, guarantee a profit, but also remove the doubt that equity would be lost. You know what I mean? So,
yeah, that is definitely a challenging area because, the fear of missing out, FOMO, is something that a lot of traders get in trading. Yeah, because if you didn't have that stop loss there, it could have just gone up your way and you would have been fine, right? So that's definitely something that I can relate to there as well. But tell me, before we go into sort of psychology of trading, tell me, in your early days, was there anyone that sort of really inspired you, your trading? Like, did you learn from a mentor or did you attend any courses to sort of upskill yourself?
yeah, man, I did, and I still continue to do that stuff. But I got on with this guy named Colin, and he was lovely, man. He was my mentor for about 12 months, and he showed me a lot of the really basic stuff like trade management, stop losses, take profits. The psychology was a big thing of his too, and he was awesome, man. So he gave me a really good foundation for where I am today. Besides that, man, I just like avid reader. Podcasts. I've listened to like that many traders on different podcasts, and just really taken a lot from kind of the old. I've always really been drawn to sort of the old school traders and guys who have been through like massive ups and massive downs and have come out on
Yeah.
the high end.
Yeah, talking about that, when you look at a lot of YouTube videos these days, there's a lot of younger guys that obviously, flaunt a lot of wealth and whatnot on YouTube. And sometimes I do think that, it probably does send the wrong message as well, because trading is not one of those quick, get rich quick schemes, in my view, at least if you want to do it properly. What's your take on that? Do you think that a lot of the newer guys are sort of just jumping into it, misunderstanding what trading is altogether?
Man, I think probably, yeah. I think there's a real allure. Like one of the big things I think, and I've been studying for a bit now, is just this idea that trading, like it gives you more freedom than any human being really ever has in their whole life. Like you have any billion trillion of opportunities every day to do something that is going to make you money or wind you in the poorhouse potentially, but we have as much freedom as we've ever been allowed doing this. And so people don't know how to handle a lot of the time what that freedom actually feels like. So people think about that and they see the Lambos, they see like sitting on the beach, 10 minutes of trading each day, $10,000 a day. Like, I think that stuff is fairly misguided. There are probably guys who do that, but I feel as though that, a lot of that sort of internet stuff has really like, probably steered a lot of young traders the wrong way, and I don't think it's an easy thing to do. I got into it, man, and I just found that I loved it, and it was just like the grinding, the hard work, the learning, the getting really humbled sometimes. And it's such a great thing to grow as a person when you can be humbled, get back up, start again, reestablish, like, and I think that a lot of those YouTubers and stuff, they make you believe that that's not, you get these guys who are 22, 23 years old and
Yeah.
8 Lambos in the garage. And it's like, well, I wonder how they did that firstly. And I don't even know if that's real, but all the power to them if they did. But I don't think that this industry is like that, man. I don't think it's that easy, but maybe I'm wrong.
Yeah, I tend to agree with you there, Chris. I do think there are some people that obviously get very lucky in this business, but for the vast majority of us, I do think it's the grind and learning from our own mistakes and growing as individually as traders, and then sort of it's like driving, right? It takes a time to get that skill, and once you get that skill, it becomes a lot easier. Now, that doesn't mean you won't ever make a mistake in driving, and I think that's how it is in trading too. I think it's very similar. It takes a lot of screen time to sort of understand patterns and to get your eyes across patterns. So, Chris, on that note as well, I want to just touch on technical indicators, right? You did mention that you do look at an indicator when you get out of trades. Um, what are your main indicators that you use for trading, and what would you suggest to new traders that rely on a lot of indicators? Because I've seen this in a lot of my students. They like to overcomplicate their charts with a ton of indicators. What's your advice to them?
Yeah, man. Like, my advice, I suppose, would be the same advice that probably Colin gave me, and that a lot of real, probably veteran traders would also give. Not that I'm a real veteran trader; I'm still learning to. But um, that old saying, like, keep it simple. I think so. One of my biggest ones, honestly, 52-week high. If a company has just reached its 52-week high, and they've had some half decent, news reports. They've had an industry catalyst, news catalyst, 52-week high, and there's other fish in those same waters that are also sort of raising up with them. That's I think that's a great one, man. Some people aren't really into that because they think, oh well, if it's hit its 52-week high, which often coincides with an all-time high too.
Yeah.
If you've reached your 52-week high, they think, oh well, it's got to go down from there. But I feel as though that's where the momentum's just beginning. You could have got into it probably earlier than that if you wanted to look at 39 weeks or something like that. But I think starting out very simply and just going, what's got momentum? Let's look at what has hit 52 weeks on Friday afternoon.
Yeah, yeah, that's definitely a technique, I think, from the Turtles as well, if I'm not wrong, because they used to buy into stocks that had hit all-time highs and then ride the continuation pattern to the upside, if I'm not wrong. So that's actually quite a tried and tested way of actually generating profits in the market, because there's always more upside to what you see. So that's a great. But in terms of the indicators, you don't like use a whole bunch of moving averages and RSI and MACDs and all these sort of indicators that a lot of people tend to use.
I do use a bit, so I do the 52-week high. I also like to look at just EMAs, exponential moving averages, and see where just sort of see the strength of the trajectory through that. And that's really the only sort of two things I use, to be really honest. I have dabbled in all sorts of things, and you end up with all sorts of ink across your page, and you are more confused than anything. The fact is that if something's got momentum, something's got a news catalyst, something is in demand, and there's not enough supply,
Yeah.
I think that keeps it nice and simple, man. Yeah,
Yeah,
yeah.
no, that's really good. That's really good. So in terms of, we'll move across to like trading psychology. This is a topic that comes up a lot with traders. And my view on this, Chris, is if your system that you're using to trade is solid, you still need to use a level of trading psychology. But if your system is solid, I think that then helps your trading psychology, right? Because if you know where your entries are, your exits are, know when you're wrong, then the psychology then becomes a little bit second nature in that process, right? If you don't know where they are, then you're fully dependent on your psychology, because you don't have a game plan for what's happening in front of you. So in terms of your trades, Chris, how do you manage your psychology once you get into a trade? Like, do you have a planned sort of trading plan for each individual trade, and once that's done, how do you document that in your journal?
Yeah, so good question, man. I have dabbled with both, like a very strict trading plan, and I have also gone with the heaps of stocks on a watch list, and watch something for 4 days just go bananas, and go, I need to get into it, and in 10 minutes you're stopped out. It has happened that many times. So my trading psychology, man, that I'm still working on, like, this is still a work in progress, but I want to trade almost 100% mechanically, where I go, these are my entries, this is my stop loss location to begin with, this is my exit, and I do basically have that. I am still working on that as well because I want it to become absolutely flawless, and that's talked about in a book that I mentioned in my last podcast there, but Trading in the Zone, that talks about that a lot,
Yeah.
and knowing that nothing is predictable, and we just have to uh, eat it whether we win or lose, and knowing full well that those consequent what one of the two is going to happen, and to be happy with both.
Yeah, that's right. Um, on that, Chris, is there any way that you are looking to automate your system, or is it just too hard, the particular system that you're trading, to fully automate from a
Mate, I would love to if I could do it and just have the computer take over for me. I think my technical abilities probably limit me from doing that at the moment. And it also kind of like because I enjoy doing this so much that it would just sort of take away. Like, yes, this is about making money, but man, if it was if it was just like something that people did for fun to do, I would 100% do it because I love it that much. So in terms of strictly automating everything, I probably wouldn't do it, only because that would take me out of one of my hobbies that I really enjoy doing. You know what I mean? That sounds
Yeah,
a bit
Chris, I
sad,
think
but
you enjoy, from what having spoken to you now, I think you really enjoy the sort of context of looking into various companies, what they're doing, and more importantly, where the world is headed to, because a lot of the plays that you're doing in the market sort of tell you the direction as humanity where we're going, AI or nuclear or what have you. Those sort of trends speak to something deeper in us as humans as to where we're heading. And looking at that and researching that, I think definitely gives you a great deal of satisfaction when it comes to trading. On psychology as well, Chris, has there been any times where you've repeated the same mistakes over and over again in trading?
yeah, definitely, man, definitely. I have in my most recent bout, I would say that fear of missing out, that idea, and having I've only kind of recently, say in the last sort of 6 months, got into U.S. stocks. So once you get over there, you open yourself up this just gigantic basket of very high liquidity, very big companies that like moving up and down, and in ASX, 10 to 12% a day is an anomaly, whereas over on Nasdaq or New York Stock Exchange, 10 or 12% is, you can get that on
Wow.
a very large number of stocks. So I got over there and I was kind of a kid in a candy store, and I was
Yeah.
like, oh, I want this, I want that. And like that FOMO thing, not having a plan and just going, oh, what's this shiny new thing? And also like just being victim to some, like, probably being victim to myself, but just wanting to get my head around all of the who are the hot companies over there. So it takes a while to first get into that. And when you start doing that and you go, oh, these guys are hot, you really got to consider your sources when you're deciding which companies are on the up, because they could be on the up for today and tomorrow, and then tomorrow they're in the tank. So I have been a victim, it's my own fault, and that has probably been my largest mistake recently, is getting away from my mechanical system and going into the I think this is going to go up mode, because man, like we just spoke about, no one can predict the future. It's absolutely impossible.
Yeah, and Chris, then that's what comes back to having a proper set out trading plan, right? I think a lot of new traders or intermediate traders, I know in my view, they don't really have a trading plan. They just sort of just enter it based on a whim. They don't write down the possible scenarios that could happen. And then once they're in the trade and certain things happen with price action, then they react to that. They react to that based on emotion. So they sell too early, they double down and buy more, add to a loser. So all of these things I've seen just don't help. So I think it's actually really good to, completely go mechanical as much as possible with trading where possible. You might know one of the greatest traders, Jim Simmons. I don't know if you've heard of him. He ran the Renaissance Fund. He passed away about a year ago. He was a mathematician that lived in the US, and his system was one of the most successful systems. Unfortunately, that system is black box, so we won't know how he executes those trades. But he basically has an algorithmic system of execution, and he's one of the most successful hedge funds that have ever existed. So You know, so that tells me that having a very mechanical way of doing trading definitely beats one which is just completely discretionary with no rules. It just leads to a lot of headache and heartache for a lot of people. So, Chris, just looking at your own sort of trading journey so far, you know, you've sort of been doing this for about 11 years now. What's next for you? Are you going to be sort of going out on your own, or going to a prop firm, or what's sort of your next evolution for Chris?
Thanks, man. Listen, my next evolution, man, I just want to always continue to learn. I want to always continue to work on my psychology and my inner peace, honest to goodness. Really work on being the best, most sound, equanimous trader that I can be, man, is really what I want to do. Like all those things with like the Lambos and all that. Like I would love to have that stuff, man. But I just want every day when I go to bed to know that I followed my plan, I followed my system, and I did things my way. Win, lose, or draw, that I can look myself in the mirror at the end of the day and say that I did the best that I could, man. Yeah. So I just want to, as a trader and a human being, continue to grow, and I want to keep my shareholders, my two little monkeys down in the other two bedrooms. I want to keep them from losing their shirts, if you know what I mean. Yeah.
Yeah, that makes sense. But I guess, you know, these days there's lots of prop firms that are popping up everywhere across the world, and a lot of new traders tend to gravitate towards them because, you know, they obviously give you a lot of money to trade with if you are successful for their challenges and go from that. You probably heard of a lot of these. Has that ever tempted you, Chris, to sort of go into a prop firm and approach it, or sort of not interested in that, rather just trade your own money for now?
Yeah, man. No, I have researched it, and I know that there's a lot of fly-by-nighters, and I know there's some good ones, and I have actually been on it with some good ones. But one thing that I've found that I can do, which is kind of almost like a hybrid sort of system of trading your own money and using someone else's, is trading CFDs, which
Mm,
in Australia is a pretty common thing to do. So when you can use some leverage that someone else's, you know, like your broker's money, I think that's very similar. It's probably to these prop firms, like
yeah,
um, without having to actually pay them. Well, you do pay them. You always pay, but without paying them up front and then being subject to a bunch of rules. Like I didn't get into this to incur more rules in my life. I want to have less rules. So if I could find something that was like let me do what I wanted to do on the time frame that I wanted to do it, I absolutely would look at it. But I've found with CFDs, I can do those things. I can trade where I want, when I want, what time, how long, X, Y, Z, and never really have to fight with anyone about getting my money. If I press sell, it's sold, it's in my account.
yeah. So for those that don't know, obviously CFD, that's called contracts for difference. It's basically you're borrowing against the stock or investment you want to buy, and your broker gives that to you. So you don't need to have the full amount to buy it. You can even buy a fractional percentage, and then once it goes up, you just pay the difference, or you keep the difference between where it went up and where you. It's obviously a leveraged product, so it's a sort of a loan that you're taking from your broker. So Chris, you moved from the Australian markets to the US. What prompted the shift in you to move across to the US equities side?
Um, Great question, man. Probably for the most part, I'm just seeing, like, looking on ASX and in Australia alone, like knowing that this AI thing is just going to be massive, and there's no stopping it at this point. But I mean, there might be besides kind of the uranium miners that are sort of the resource ecosystem, in that there might be 5 to 10, like a handful of AI companies doing, um, you know, branching in that direction.
Mm,
Whereas in the US, man, there's new ones popping up every single day, and some of them are just going to go kabang, and others aren't going to do anything. But probably, sorry to answer your question, like liquidity is the one, like just these massive companies that, and the movements that you see that you can get big movements, and you can you can make some pretty decent money in a shorter amount of time, I feel.
Do you feel like that's because the tech industry in the US is more sort of ahead of its evolution than the Australian tech industry overall?
It might be, man. Like I just think it really comes down to a matter of population. Like they've got, was it
100 million, maybe.
340 million or something like that, and Australia. I think that like Australian people are totally like are amazing at they're amazingly creative. There's just not that as many happening. So when you get a population that large, you're just going to get a lot of creative people that are very smart. I just think Australia's the population's lower, liquidity is smaller, and the companies are just the moves aren't quite as big because there's not as many people trading them as well.
Yeah, that makes sense. That makes sense. So I guess one of the things I want to ask you is if you have you picked up any shiny objects in your trading that you had wasted your time on? Like you picked up some strategy or something that you wasted your time on, and if so, what would that be?
Do you want a strategy or do you want some individuals? Because I could give you probably both.
Yeah, give us both. Tell me about both.
Yeah, sure, man. Sure. Listen, back when I was just getting into this, I'd say this is probably 9 years ago or something. We could look it up. I'm not sure, but there's a company out there right now called Nuix and NX, and I'm not sure what their stock ticker is. ASX company though, Nuix, and I can remember it was around Christmas time, and they were on the cover of the was it the Sydney Morning Herald? Anyways, it was the cover of the financial page, and it was like Nuix, and it didn't really tell what they were doing. It didn't really say what they did, but it was just this big flash article, and they were IPOing in like a couple of days or next week or something. And I was like, honey, let's buy this, and she's like, okay, yeah, sounds good. And I can remember, man, it opened at about $8.50, and then as IPOs go, they ramp up on the next day or two, and then I thought, okay, I'll get it on its decline. So I got it probably back at around the $8.50 mark. And at the time, I didn't have a whole great deal, so I was like, but I did put what I thought was a decent sized trade on at that moment, and I was like, oh, this, if the Sydney Morning Herald is talking about this, man, this has got to be something, And I waited for a bit, and I waited, and I don't remember what month it is, but I could not find anything that this company actually did. They were saying like sort of cybersecurity, sort of this and sort of that, wishy-washy sort of stuff. And I just got this gut feeling. I said, I think this is bogus. And I sold it for a little bit of a loss. Like I might have lost 15%, but not that long after, man. It was tanked. It went down to
Lucky.
Lower than $2. And I was like, holy smokes. I just had a feeling. But to answer your question, this shiny thing, like this was a well put together article by the Sydney Morning Herald, and I was like, no, this is going places. If these guys are talking about it, it's got to be something. Massive pump and dump, and that's when I realized like you can't trust any of these people. That was one for sure. I could tell you another individual one if you wanted to, real quick.
Yeah, go ahead.
There's a company out there called Drone Shield, DRO, Australian again. And this was last year, I think. And they were going up. And they had hit 52-week highs 4, 5, 6 weeks in a row. And this was before I'd gotten with Colin, before I started really sort of knowing what I was doing. And I said to my wife, I said, honey, this Drone Shield, this is just going bananas. Like they kept getting these contracts in the US, and they do like drone defense. And I was like, honey, let's do it. She goes, okay, let's do it. Okay. So got the money together, did the thing. And I was just nervous as anything, and I'm telling you, man, 2 hours after purchasing, this stock went blah, like this. And I lost initially 20%, but I ended up losing probably like 60% in over 3 days. And the number that I bought it at, it was $2.76, was the high until it dropped, and it never went up. It's past that now. It's past $5 now. But I just saw this shiny thing. To answer your question, I saw this shiny thing, and I just said, oh, I got to have that. And man, I just got the rug pulled so bad underneath me. It
And
was
is your
unreal.
wife still mad at you for that trade, or she's forgiven you for that mistake?
No, no, man, she's great. She understands that mistakes were made, and it always makes her nervous when those things happen. But I am doing my best. Like I said, my 3 shareholders down the hallway, I got to keep them. I got to keep them happy. So I try to DYRO. You know what I mean? Do my own research and make sure that I'm not getting rug pulled.
Yeah, cool. So just coming into that arena of errors, what would your recommendation be? Give me 3 recommendations, Chris, that you would give to a brand new trader that you met on the street. 3 critical errors that they should avoid in trading. What would they be?
Be very discretionary with the news that you take in, that you consume. There's any type of online person news, even stock trading websites. Like if they're not showing you technicals and stuff like that, there's any chance in the world that they are invested and are pumping, and you're going to buy in and they're going to dump it on you. So I would be very discretionary about who you're listening to. However, like I said before, news catalyst, there's some great news out there, and you just have to be able to sift through that stuff. But that takes time. So, one, be very discreet about who you listen to. Number 2, never bet more than you think you can handle losing all of.
Mm-hmm.
Second, like massive one. If you are comfortable losing $1,000, only place do 800. Like, don't, just make sure that you're not gonna, because the name of the game, I really believe, Nandis, is to stay in the game until you are credible enough to actually become like considered a trader, you know.
Absolutely.
And if you damage your psychology bad enough early, it's going to be like touching that rose, that thorn of that bush, and you're never going to go back again. So it's, be very, very cautious with how much you are willing to lay down. Even if you think this is 100% winner, no doubt about it, I would really be willing to lose all of it before you even press the buy button, or sell in some cases.
Yeah.
And number 3, what would I say to a new trader? You probably want to stay off of YouTube and those Lambo type of dudes. Like, man, go and learn about William O'Neill. Go learn about guys like Tom Basso. Go learn about guys like Mark Minervini that went through, 4 decades of trading through how many different market drops, bubbles, dumps. Like, go learn about these guys and how they dealt with it, and realize that this is a business. This is not like how those YouTube guys portray it, like we talked about earlier, man.
Yeah.
Like this is more
real.
This is a business.
And
Yeah.
very wise words there, Chris. I think the 3 points that you brought up, I think they're very wise. And I think looking at my trading journey as well, they definitely do ring a bell. And when it comes to following someone for inspiration, I think it's also important that you make sure that they are who they say they are. For example, people like Mark Minervini, who uses the CANSLIM system. I know that he's won several trading championships. That's audited, publicly official data that he's actually won those. So those kind of guys do have a proper system and experience that back them. So yeah, definitely if you're going to follow people, it has to be the people with the right credentials. You can't just follow any old bro and hope to make money, because I think that's just going to lead you down the wrong road, right? So
That's it, man.
So Chris, in terms of sort of your future, we've touched on that briefly, right? You're still working on your own trading strategy. Are you currently trying to build a community of traders? What's sort of your outlook with trying to build a community and to go down that direction?
Yeah, absolutely, man. I really believe that, like, if you listen to, say, S&P Capital online, they're a prop trading firm out of the United States, but they're massive, and they give out, they do videos all the time about teaching young traders like some of their stuff. But in their firm, they are almost 100% collaborative trading. So they trade in small groups, 5-6 people. I don't know if this maybe gets a bit bigger, but yeah, man, I would definitely love to go down that road. I'm trying to sort of establish that through my YouTube channel. And, yeah, I am definitely looking to potentially do that in the future. For now, like in my current geographic location, I don't really have that, but because the world's such a small place now with the internet. I feel
Yeah.
like the more the merrier, and one horse can pull 6 carts, but 2 horses can pull 30. You know what I mean? And
Yeah.
that really, I think, really applies to trading as well.
Yeah. So you plan to sort of build your business, build a base, build a following, and sort of yeah, expand sort of what you're doing and share your skills with others. If I'm hearing that correctly, right?
Yeah, yeah, I'd love to be doing that. Yeah.
Okay, talk me through a little bit about your YouTube channel. Like I know I've seen it and it's great because you do give some really good stock tips. So talk me about like how often you sort of jump on YouTube and yeah, how often your viewers can basically get updates from you on YouTube.
Thanks, man. I really appreciate that compliment. I've worked hard on it, and I just love it, man. I love sharing myself with the trading community, and I just want to, yeah, I just want to like bring it to all of all the people, and give them some good content, give them some honest, genuine, yeah, like honest, genuine content that not only deals with just trading itself, but the psychology, taking care of yourself, taking care of your mind, taking care of your body, and all of those things I think are going to create, in my attempt anyways, a great trader. But yeah, sorry. So we're called McConnell Equities. You can find us on YouTube, and I try to do one stock pick a week, and I'm going to try to do a midweek sort of catch up and go through some other aspect like of trading. So last week I did my 5 top trading books, and yeah, we're just going to keep going from there.
Yeah, that's great, Chris. I mean, it's good that you've got an online presence, and I encourage all of my students and all the people that subscribe to my channel to go check out Chris's work. I think there's some really good content in there. I definitely got a lot out of his video he posted up today, so go check that out. Chris, tell me, what's your most favorite trading book?
Geez, well, I suppose we just have to go back to what we talked about earlier, how to make money in stocks. William O'Neill, like that was for me, like to get my hands on that, and to go through just a very, yeah, like this classic guy, and it's fairly easy to read, and going through what was fascinating, I found in the first 100 pages, he goes through, pardon me, he shows stock charts back from the 1900s, whether it was rice or oil or whatever it was. And those patterns, man, those patterns that we see today, double bottoms, cup and handles, flags, all they've existed for ages. And I was fascinated by the fact that those those men trading back then, not that it was men or women, but there was mostly just men probably.
Correct. Yeah.
Those men trading back then were looking at the same things we're looking at, and understanding, because I think the markets and a graph and a chart is all just human psychology on a piece of paper. And those men 120 years ago were learning the same things about human psychology that we are learning today, except they would have no idea what AI is, and we would have no idea about rice futures from the 1900s. So, I mean, it's just fascinating that you're part of, like, it seems you're part of a lineage of people, like mostly probably men, but people that are invested in learning about human psychology through this thing we call trading.
Yeah, for sure. No, that makes sense. I mean, yeah, psychology doesn't change, right? Greed and fear, they say, is it's always with us as humans. So I guess that's what drives markets. Do you tend to use AI, Chris, in terms of your stock picking? I just was curious. Do you use ChatGPT to do your research by any chance?
Mate, I have plenty. So, yeah, I do. I discovered doing that not too long ago, but I've gotten to a point where I think sometimes I ask too many questions on there, and then they kick me out for a little while, and until my questions cool off. But just the amount of things that you can do with AI, I have just found to be totally fascinating. And that is another way that you could be led down, like, sort of a poor path, because you can go, you could think you're on to a real winner because of this series of questions that you've asked. But at the end of the day, man, you have to go back to your system. You have to go back to your system. But your information gathering can be cut, time can be cut in like 1/10 by using it. So yes, man, I use it and I love it.
Awesome. Awesome. Well, that's great, Chris. Look, once again, for all my subscribers, it was called McConnell Equities, right? Is that what it is,
That's
Chris?
correct. Yes,
Yeah,
thank you. Yes.
McConnell Equities. So I'll get everyone to check that out after later on. So that's really good lead. So Chris, that brings our interview to a close today. And again, you're very honored to have you as one of our guests. And I think I personally got a lot out of this interview, and I'm sure that our viewers have gotten a lot out of this interview too. And mate, I'm keen to interview you a little while later down the road just to see how things are progressing with you. This is not a one interview and we sort of end our journey. I like to keep in contact with all my other fellow traders. So I really appreciate you joining, Chris. Any last words of wisdom for your followers and my followers in terms of their trading? What advice would you give just before you, sort of exit the interview today?
Oh, well, listen, firstly, man, thank you very much. Such an honor to be here. And it was I can't believe that was an hour that was just like flew by. So thank you so much for having me. It's so great to talk. I just love talking trading. I do it. We could go for another 12 hours. I would just love it. Any piece of advice I would say, man, I would just be like, I'm from Canada, right? So biggest thing in Canada that is associated stereotypically ice hockey, right? So, the biggest thing I would say, man, is that, all these guys, these Lambo dudes online and that, they're showing you one side of it, man. But if you want to I really believe, man, if you want to be a great trader, you just have to love trading. Like if you don't love it, and if you're not, like if you're just doing it because you kind of want to like try to hit that home run and make a couple mil and just be done with it, I feel like this is probably not the thing for you, man. But if you love it, man, and if you just want to like learn and learn and learn and learn, man, eventually you're going to crack that walnut open and you are going to one day say like, yes, man, I'm a trader. Like I'm a fair income, I'm a profitable, trader. And I just feel like, and Wayne Gretzky, this hockey player I was saying, he said that he's like, I never wanted to be, my goal was never to be great. I just love doing what I do. And that's what I love, man. I love trading. I love everything about it. And I hope someday to be great at it.
Well done. Very wise words. Thank you, Chris. Thank you for joining us.
Thanks, Nandis. Thanks so much for having me.